For those who don't know me on the call, I am a corporate account manager for Halifax intermediaries, and I'm joined by my colleague Isaac, who works for BM Solutions, and you'll be hearing from him after you've heard me ramble for the next 10 minutes. So what am I going to talk about today? So we are now officially in December, and I hope everyone's got their Christmas trees up. So a bit of an overview as to what we saw play out in 2025, a glance into 2026, and also really leaning into where the opportunity is for all of you on this call as we go into the new year, fresh new year. So I'll kick off. So let me just get my notes ready there. Perfect. So the slide in front of you shows UK finance forecast at the start of 2025. So at the start of the year, acquisition was forecast at £260 billion. Now, as we close out the year, it's tracking closer to 275 to 280 billion pounds, driven by strong performance in both residential and buy-to-let. That's a clear sign of market resilience and growth beyond expectation. The product transfer market was forecast at £310 billion, again across residential and buy-to-let, and year-to-date figures suggest we're firmly on track to that figure. One point I really wanted to emphasise, though, was the intermediated share of acquisition business. This stands at around 85%. So 85% of the time when a customer is buying a new home, they are going through a mortgage broker. So that means brokers have never been more important. Customers are actively turning to brokers to simplify what is often the biggest financial decision of their lives, and shows the value of the relationships you all hold on this call. We haven't quite got UK finance data for 2026 released yet, so that should be coming out and it being in the public domain probably in the next couple of weeks. So moving on to CACI. So on the 20th of November, one of my colleagues attended the CACI conference. For context, for those who don't know what CACI is, so CACI data covers the vast majority of the market, so around 85% of residential and 75% of buy-to-let applications. Please note as well, this was pre-budget. So the key takeaways: more lenders are entering the limited company space, including ourselves, which Isaac, I'm sure will update you on after, creating fresh opportunities. So 2025 is forecast to be bigger than 2024, though still shy of the post-COVID highs that we saw as lockdown eased. Landlords, so the landlord section, so landlords are waiting for clarity on the Renters' Rights Bill and energy efficiency requirements, so retrofitting remains a major challenge. Looking ahead, the refinance market offers significant growth potential next year, which I'll go into in a bit more detail after. And as Zoopla's Richard Donnell highlighted at the conference, the market is becoming increasingly segmented. So data-led automation will only accelerate as well as we lean into 2026 as an industry. So not just as a lender or not just as a broker, as an industry, we need to embrace technology and adapt to this shift moving forward. Have a little breathe before I go through inflation. So turning to inflation, October's figures come in broadly as expected, which is reassuring. We're seeing encouraging signs in services and core CPI, both in the right direction. Yes. So, however, food inflation remains stubbornly high, and that's still a concern. This backdrop has sparked some renewed optimism in the markets, so all eyes are now on the next MPC meeting on the 18th of December. But what's the consensus? So a 25% base point cut looks highly likely, and it probably doesn't stop there. Nigel Green, CEO of De Vere Group, expects the Bank of England to follow up with 3 more cuts through 2026. But why the confidence? The data supports easing, the fiscal picture allows it, and the growth outlook increasingly demands it. Even the OBR have shifted its focus, its growth forecasts now align more closely with the wider market view after previously being quite optimistic. So, in short, inflation is stabilizing, which is good. Rate cuts are on the horizon. Great. And the economic narrative is evolving in a way that could reshape market sentiment going into 2026. Now turning to fiscal policy. The starting position on fiscal headroom is much better than many feared earlier in the year. The deterioration caused by policy U-turns and gilt yield movements turned out to be far less severe than expected, and that's good news. Against this backdrop, we saw a broad package of measures announced. Most were widely rumoured, so there were very few surprises. In total, these changes are expected to raise around 26 billion in additional tax revenue. So breaking some of that down, the freeze on personal tax thresholds is the biggest contributor, generating around £8 billion. Adjustments to national insurance on pension contributions add around another 5 billion. And extra taxes on property and savings will raise around another £2 billion. So while the measures themselves weren't unexpected, the scale of revenue generation is significant, and it reinforces a more stable fiscal outlook than many had predicted. So that's where we're currently up to. So looking ahead. So we've looked at inflation and its impact for next year. But let's talk about the other headwinds as we move into 2026. So starting with housing. So Halifax's latest house price index shows that prices have flattened this year compared to earlier highs, but it's still rising modestly. The average UK property price now sits just under £300,000, with annual growth around 1.9%. Affordability remains a huge challenge. Improving household incomes and easing mortgage rates are helping to improve confidence in the market. Yes, modest growth of up to 1.9% in 2025, but it does signal stability rather than a downturn, which is, again, a good sign. Policy and tax. Let me scroll down on my notes. Policy and tax remain hurdles, so housing continues to be a store of wealth. But with fewer people moving home, equity is trapped, which we all know too well. So there's limited access to housing. The new government has pledged to build more homes, but supply still falls short. So existing stock that's already in the market will carry the weight as we head into 2026. At the same time, demand for mortgages is becoming more complex and segmented. Growth in technology offers an opportunity to streamline processes for brokers and customers. But we know there's still concerns in regards to technology in the overall market. Complexity creates opportunity, though, particularly in riskier or specialist lending segments. So we expect to see a bit more of that. And looking ahead, the refinance market offers significant growth potential next year, which I will now go through in a bit more detail. So you'll be happy to know this is the last slide from me, and then I'll hand you over to Isaac. So look, I really like this slide because I think it really brings to life the outlook for next year and the customers that are in the market that we can really help. So 2026 is shaping up to be one of the biggest remortgage years we've seen. And brokers who act early, you guessed it, will win. So most borrowers coming off deals are on rates above 4%, with peaks in April So you'll see the pink spikes. The pink ones are between customers that are on 4 to 5% at the moment. The light blue is 5 to 6%, just to give you an overview, so you can see on the key on there. So, so June and December. June alone sees over £30 billion worth of maturities. Half of it above 4%, and a large share above 5%. These customers will feel the pinch and be actively seeking advice. It's not just high rate customers. As this chart shows, many are coming off ultra low rates below 2%, which means a significant payment shock. So there's still customers who will feel that shock that a lot of customers have felt the last few years. This year is a complete mixed bag of people, and that's why advice has never been more important. Reviewing everything from mortgage terms to protection policies is where the real opportunities lie. Take January as an example. 7% of customers are coming off high rates, potentially freeing up money for things like protection if they may have cancelled it to save money when they were struggling, while 41% are coming off rates at 2% and facing higher monthly payments. So term reviews and making sure things are affordable becomes crucial. So in summary, brokers who plan now, engage early, and position themselves as trusted advisors will capture the market in 2026. 2026, yes, there's going to be challenges, but it's also a solid year of opportunity. So hopefully there's some food for thought there as we wrap up the year. And I will now officially stop talking and hand over to my colleague, Isaac. Thank you very much.
Thanks, Laura. I'm so glad I didn't get the inflation slide. Well done. I will, let me, if I can share my screen, I will see if I can get this PowerPoint up. Hopefully there is no issues with it. Sorry. Sorry, give me a second. Let me know if you can see the notes, Laura. Probably you're the best person to let me know. Thank you very much.
You can't see notes. I can see the screen. You're good.
The script, sorry, my PowerPoint. I can see the notes. So my slides are going to be slightly different. So what I'm going to go through today is the Renters' Rights Act. Now, I know that, I guess, us being a buy-to-let lender, we've put out some really good content out there. There's a lot of good pundits. There's a lot of good resources that are out there that I hope you're utilizing and leaning into. What I get the benefit of doing is seeing all of you on a day-to-day basis and actually hearing some of the knowledge gaps that are still out there, and where this is the biggest change that's happening to the private rental sector, to the buy-to-let market across a generation. I think it's important that as a lender, we're doing it the best we can to make sure that you're armed with all the information, as much information that you need. So when your clients do ask and engage you about the Renters' Rights Act and that typical question of, oh, what's your thoughts? Should I do X? Or do you think I should do Y? I want to make sure you've got enough information and you're feeling confident about at least talking around the topic. You don't have to know every single minutia, but at least being able to talk about the topic, no different to other aspects like, the minimum energy efficiency standards and other elements that are impacting the industry. So, just to introduce myself, my name's Isaac Kikabi. So I'm a business development manager. I cover the areas of South London, ME postcodes, DA and BR. So if anyone comes from that part of the world, hi, good to see you. And as well as that, I think the question I like to throw out there before I start this pack is quite simple. I'm going to need some engagement here. Hopefully it works. But, I'd love to know, if you can just react, whether you're using kind of emojis or, if you want to use the chat or something. But do you feel, and be as honest as you want to be, do you feel you lack confidence in discussing the Renters' Rights Act with your landlord clients? So just looking for some version of a reaction, just to see who's awake still and actually listening. Okay, there's one. Thank you for being honest. No, I do think probably there is a lack of confidence out there more than we're letting on, because there's been such a massive barrage of information and it's knowing where to start. So hopefully today helps to demystify some of that information. So the first place I'm going to start is the whole purpose of this bill. So the Renters' Rights Act, formerly known as the Renters' Reform Bill, and then the Renters' Rights Bill. It's changed quite a few names. The purpose of the long title was to remove what's called Section 21 notice, no fault evictions. This is where a landlord can essentially go, I would like my property back. Here is a notice. I need you to leave, and I don't need to give you a reason. That is going. And actually, we now have a date. So the 1st of May will be the first day that landlord will no longer be able to serve a Section 21 notice. And therefore, what they will need to use is a different type of notice, which I will dive into. So it's very important to understand from a landlord's perspective that that sense of being able to take control back of their property is also being removed as a core purpose of this bill, and offering more rights to the tenant. So in replacement of Section 21, which is the no fault eviction, you've got Section 8, which is a fault eviction. So it's basically the opposite. So it means you have to give me, as the tenant, a reason why you want me to leave your property, because this is my home, and you can't just kick me out. So what's happened with Section 8 is it's been bolstered. It's been built up, so it's got a little bit more to it than what currently is in place. So some of the things to bear in mind is things like, ground 8, 2 months arrears, and a landlord can give 4 weeks notice to essentially request that tenant to leave if they are in 2 months worth of arrears. You've got a bolstering up of ground called ground 7A, which is now mandatory. So if there is serious rent arrears, the court has to grant possession or a possession order, and if, for example, if a tenant owes at least 3 months rent at both the time the notice is served and at the hearing date, then there will be a 2-week notice period. So the landlord can get that tenant out quicker once it gets to through that court process. But let's all be honest, the court process is not the smoothest, fastest, and there's a lot of tripwires for landlords. So there is a big conversation at the moment happening, at least in the landlord circles, around what's going to happen to the courts. Are they going to become more efficient to allow these cases to flow through? There's some good news for student HMO landlords. So some of you might have landlords who focus on the student HMO market, and this is for 3 or more separate households. So it doesn't include flat shares where there's 2 parties or anything like that. So there's something called a Section 8 ground 4A. So that means that if the property is let out for term time, the landlord will be able to serve notice to an existing cohort of students to allow a new cohort of students to come in the following term time. So that was something that was highlighted because the student market was quite vulnerable, because if a tenant can essentially, leave whenever they want, for example, or if a tenant can refuse to leave at the end of that period of their student studying, then that would have made the student market more or less unworkable, which is good that that's been changed. So no fixed term tenancies. So we know them as ASTs, assured short hold tenancies. They are going. So from the 1st of May, there will no longer be an assured short hold tenancy, and there would be an assured periodic tenancy. Now, all existing assured short hold tenancies, or ASTs, will then automatically become APTs, so assured periodic tenancies. And in short, what that means is for the tenant, there will be a periodic nature about the tenancy. So they will be able to serve notice, 2 months notice at any point of their tenancy, giving them flexibility. And that initial 6-month fixed period is going. That's the key part of the assured short hold tenancy. It guaranteed the landlord that tenant has to be in place for the first 6 months. And also the landlord can't serve notice in the first 6 months, but now that's moving to a periodic nature. The tenant will be able to serve notice as soon as they want, but the landlord will not be able to ask the tenant to leave until they've been in place for 12 months. So again, I always remind brokers that this is the Renters' Rights Bill. It's about swaying the rights more towards the tenant, because the thought process is at the moment it's weighed too heavily to the landlord. So that's a key part of the mechanism of what's happening with the assured periodic tenancy. So from the 1st of May onwards, the reason why I raise this point is because as brokers, we're quite light touch when it comes to documentation. Sometimes we don't ask you for assured short-hold tenancy at the moment, and I don't see that changing in the new world. But when we do ask, you want to make sure that your landlord actually has the right document, because you want to have the right document on file as well. So just to let you know what the risks are for landlords, if a landlord continues with a fixed a fixed tenancy past 1st of May, they can be fined up to £7,000 for each instance that they are found out to be doing it, and repeat offences can lead to up to £40,000 of fines and criminal prosecution. So this could be quite costly for landlords if they don't get it right. And the question is, how knowledgeable are your landlord clients really? The same way that one person said that they wouldn't feel very confident having that conversation with their landlord. The question is your landlord confident? Do they know what this bill actually means? So keep an eye out. If you've got any way of plugging in to find out when these changes are coming in. One that I always quote, because we do work with them, is NRLA. If you ever want to follow an account on LinkedIn, that could be a good one to just keep up to date with some of these changes and how timely they are as well, so you're ready for your clients when that time comes. So when it comes to rent increases, if anyone is a landlord here, you would probably be familiar, or you've dealt with landlords who have told you about serving a Section 13 notice. Now, currently, I could have a bit of, I don't know, tissue paper and write, I'm increasing the rent, and as long as both parties sign, that's good enough. Not a Section 13 notice. It's not an official process. So all of that casual aspect of increasing rents is going, and Section 13 will be the official route for rental increases. The landlord will have to give a notice period of 2 months, and there is basically, if a tenant disagrees with the rent increase, it can go to tribunal, and if it does go to tribunal, there is no backdating of that rent if that rent increase is challenged. So this is a very slightly different world for landlords who might just need to prepare for the fact that they could end up waiting some time for that new rent to come in. So how does that then affect if they have a remortgage and they want to raise capital, or even if they just want to make up the right amount of loan to value that they need to ensure that the longevity of their property and their assets? And this is where you as brokers, I think, have a very important role to play, because you probably have come across many instances where you've asked lenders, do you take market rent, or do you take the rent the client's actually receiving? Well, I'm seeing more and more lenders going on either what the valuer says or what the client's receiving, whichever's lower. And you may find that even though that client's rent is going to increase soon and they will be able to get a much better LTV, much better affordability calculation, actually working on the figures they have today is probably going to be the best bet because of how long it could take. So something to just prepare your landlords and manage their expectations on. So with the 4 minutes I have left, just to touch on the new Decent Home Standard. So new Decent Home Standards is massively linked to a number of things, but some of the key points is things like serious hazards, making sure that the property being offered is in good repair, modern facilities. And what that means in practice is things like kitchens not being less than 20 years old. Now, I used to rent, and I can definitely tell you I've lived in a place that had a kitchen that was more than 20 years old for sure. Bathrooms need to be more than 30 years, can't be less than 30 years old. There needs to be efficient heating and insulation. Authorities will have the powers to fine landlords for non-compliance. So that's something. And with the new Decent Home Standards, it sets a level playing field for landlords. And currently, we don't really have that defined as well as it should be in the industry. The Ombudsman and Landlord Database. So this is a really important one to watch, because membership will be mandatory for landlords. Ombudsman will deal with complaints with enforcement powers, financial penalties ranging from £7,000 to £40,000. There's an alternative court for common disputes. But the landlord database is an interesting one for you as brokers to really engage with and understand, because it will look at things like restrictions on marketing a property unless it is on the database. So no different to if someone wants to market a property, well, it needs to have a valid EPC. At least I think there's a time period they're allowed to get it sorted. This will also be one of the requirements to actually market the property, and letting agents and landlords would have to know this, because to be non-compliant could lead to fines. It's a public register, so local authorities will have access to it, and so will lenders. And I think the consideration here is, if a lender knows that a landlord is non-compliant, what view will we take? So none of that has been defined, but you, as part of your process of vetting your landlords and getting them case ready, I guess, to some extent, you might want to add that as part of your operational model to go, let's check the register, let's make sure you are compliant, because I need to position you to the lender, and I need to put the best case forward. And it might mean just not, nudging the landlord to go and get your gas safety sorted or whatever it is. So we're still waiting for the details of how this will look. I believe they've highlighted at least towards the end of next year for this to be ready. So something to bear in mind. And then you've got slight changes to tenants notices. So as I said, fixed term tenancies are going. Periodic tenancies are coming in from the 1st of May. It offers the tenant greater flexibility, removes the certainty of a fixed tenancy for landlords, and may need a different management model. Expanding of the rent repayment order. So if you've never offences, so if you've never come across this, if basically a tenant finds out that you are not compliant, or a local authority finds out you're not compliant, they can essentially take you to court, and a landlord would have to pay that tenant a kind of a version of compensation for the rent paid for the time period of living in a property that is not compliant. So that could work out really costly for a landlord if they don't follow the rules. And then higher civil penalties, £7,000 to £4,000. So in the last minute, I'm just going to kind of summarize a little bit. So landlords cannot request rent before agreeing to an assured short hold tenancy. That's going as well. And after the agreement, they can ask for up to 1 month's rent in advance. And I talked about the student accommodation side of things. So as a broker, I think it's important that you lean into this Renters' Rights Act. Please do. If you are knowledgeable versus someone else who isn't, it stands you out from the competition. And I think that's only a good thing. And I will stop talking there. Thank you.
Great. Thanks, Laura. Thanks, Isaac. Thank you for sharing your knowledge and experience. Really appreciate that. And we will share this with the rest of the advisors as well. So thank you again.
You're more than welcome. Thanks for having us. Have a lovely day.
Thanks for having us.
You too.
Bye.
Take care. Bye-bye. Bye.
Bye.
Hold on a minute. I've got you. I can see you. Maybe I need to leave your one first of all. Hold on a second. Let me just come out of your one.